90% of all the strategies you see in the market don't work anymore. But this strategy is evergreen. It works all the time. Even in the next 100 years to come, it will still be milking out profits for every trader that pays full attention to it and takes it very serious. Why do I recommend this strategy to every trader out there? Well, that's because I have personally used this strategy myself multiple times on my live trading account, and the results have been mind-blowing. I have seen a lot of traders trying to explain this strategy, but they always get it wrong all the time. This is the first time that I am going to be explaining this strategy on this channel. And these keys that I am about to reveal to you is what you would have paid thousands of dollars to learn. But today, you get it in abundance. But before we get into all of that, click the like button to show your support and subscribe to our channel. If you are encountering us for the first time, now my tribe soldiers, let's get down into this business. Ever wondered why a lot of traders are always getting it wrong in the market? Despite everything they know and have learnt in the market, you put in a lot of hours into the charts, studying endlessly, but the results you see are not looking like what you invest into your craft. Do you know why each time you buy, the market will sell, and each time you sell, the market will always buy? Then it gets to a point where a trader begins to think if he is actually a trader, or the liquidity for other traders. All these are happening because you are not seeing the invisible lines that control the market, the lines that price will surely respect and bow to, no matter what, and no matter how long it takes for the price to get to the line. As long as they create an identical reaction around it, you are sure to make real profits from the market. These lines act as the power points of each trading day. If the market does not move to this line in the entire 24 hours period of that day, traders are advised not to trade the market. Now, to move into the might of this strategy, we need to first of all understand what these lines are called and their big role in the market. And after that, I will be showing you the exact key points where we get these lines from on any asset in the trading market. It does not matter if it is crypto, Forex, stocks and the rest of the financial markets. You will know the exact key points to get these lines that control the market every day, and how to trade them daily in the market. We call these lines the zones, but many traders call them the support and resistance lines. The support and resistance lines are those key price levels in the market, where the market is always expected to create a reaction. Traders always look out for these key levels in the market. The reason is because each time the market gets to these levels, they move around the chart with stronger volatility than the other weak spots in the market. Either you believe in these lines or not, it does not matter. When price moves around them, you will still feel the impact that it creates on the chart. But how do you identify those strong levels in the market? Well, there are two ways that we can do that. Traders can identify these levels the old and manual way, which is very stressful and confusing, or the automatic and easy way that I will be teaching you later in this video. The first one, which is the manual way, is done by identifying a price area on the chart where price have strongly reacted to. In the past, an area on the chart where the market has reacted to about 3 consecutive times in the past. And when you have drawn that, you expect the market to return to the line. And at that point, you can then apply the trading strategies that works with trading zones. This is a good way of drawing the zones, but the problem is that most of the lines that you will get are not accurate, and you will miss out on a lot of juicy trading setups that will bring you great profits in the market. And that's why we migrated to the easy and automatic way of trading the market zones on the chart. The path of profits, where the market provides the zones by itself and left to identified by the few traders who knows about it. But before we get to that, let me quickly introduce you to our mentorship program. Trading Trybe has an ongoing mentorship program, a 2-month course to turn you from a losing trader to a profitable trader. And you are not only going to be learning my personal advanced trading strategy that I use to make thousands of dollars in the market daily, You will also be getting up to 1 to 3 daily VIP trading signals and analysis on major currency pairs and Deriv synthetic indices from the same strategy that you'll be learning in the course. Both the Mentorship Program and trade signals last for 2 months. To get access to our Mentorship Program, click the first link in the description box below. Now, to get this automatic trading zones, we are going to be drawing them out from the 4 hours time frame. And when I say drawing them out from the 4-hour time frame, it does not mean that we are going to be looking out for support and resistance zones on the 4-hour time frame. When you are trading these automatic zones, you are only focused on the activities of the market for that day alone. Any zone you draw for that day will expire at the end of that particular day. We draw out fresh zones for each trading day of the market, and to draw these zones, all you have to do is wait for the first 4 hours candle of the day to close. Remember that the first 4-hour candle must close before you draw a line on it, and when the first 4 hours candle has finally closed, you draw a line at the high of the candle and another line at the low of the 4 hours candle. These 2 lines becomes your zone for that day. These 2 zones are the strongest zones in the market on that asset for that particular trading day. Although this appears very simple, but wait until we start trading them. With their correct trading strategies, the strategy that will make us profitable traders this year. Listen, when you have drawn your zones on the 4 hours candle of that particular asset, always cross-check to see that the lines are right at the high and the low of that candle. And when you have done that, the next thing you do is to zoom down to the 15 minutes time frame. Go down to the 15 minutes time frame, and there you will see these strong lines on full display. You will see how prices are already reacting to the lines already. This is the main deal. If there are other assets that you trade on your account, you can do the same thing to all of them. It's so simple. All we do is mark out the high and low of the first 4 hours candle, and then you go down to the 15 minutes time frame to trade them. It is at this 15 minutes time frame that we are going to grab our profits using our trading strategy. This one is far more better, comparing it with the first manual zone drawing strategy, where you have to look out for different zones in the market, which may not even be correct, and some which have been outdated and have no much impact on the market again at the point at which you draw them. For this automatic one, when you wake up in the morning, you already know where you're going to draw your line for that day. You don't overthink it, and when the day is over, all you need to do is to wait for the close of the first 4 hours candle of that day in order to draw out another new zones for the new day and continue milking profits from the market. Now, how do we trade the market around these zones? To trade this strategy, we need to understand the type of market movement that we actually want from the market. To trade this strategy, we need to harness the flow of the market for that day. The first thing we look out for is the break of one of the lines of the 4 hours candle. We want the market to either break out from the high or the low of the candle. And when this happens, there are 2 ways you can trade it. The first way is to wait for the market to retrace to the line that it just broke out from. Then wait for a good entry candle to appear. When it finally touches the line, with this strategy, we are moving with the flow of the market. We call this the break and retest strategy. All you have to do is to wait for a breakout out of the lines and then a retracement to the line. So for example, if the market direction is going down, as you can see here, the idea is that as you wait for that retracement, you will be following the real direction of the market, which in this case is to the downside. But what happens when the market is not interested in the first retracement? That's when the second strategy comes into play. This strategy is used when the market, instead of retracing to the line, which is outside the box, it then comes back and starts making strong moves back into the box. And that is when we pull up with the second strategy. After they have been a clear breakout to the downside, as you can see in this example, and you see the market coming back aggressively into the box, what we want at that moment is another retracement, but this time instead of expecting the retracement to happen outside the box. The retracement is happening inside the box. So we need the market to rise a little bit and retrace to the line. And when we see a good entry candle, we can enter a trade. When I start showing you more examples of this strategy at work, you will see us trading from both sides of the lines. But before then, I've been talking about our entry candles and how we are only going to trade when we see them. But which of the candles am I actually talking about? There are a lot of entry candles in the market, but the one that works best for this strategy is the engulfing candle. But why the engulfing candle? Alright, by now, you know that we are targeting the real direction of the market daily. And for that, we need a candle that signifies strength to show us that the buyers or the sellers are really capable of moving the market up or down according to the breakout direction. So anytime we see an engulfing candle appear on the 4 hours candle line during the retracement, we can then take a trade. Now, let's see some examples of this strategy at work on the chart. Here you can see that we have the 4-hour candle lines, and right here, you can see that the price broke out of the high of the zones, and after that, we had a retracement to the line, and right there as the market touched the line, an engulfing candle appeared, which gives us a reason to enter a trade, and from there, the market kept going up. In a case like this, you place your stop loss below the engulfing candle, and your take profit target at the next high, or at least 3 times the size of your stop loss. And as you can see here, our take profit target was hit successfully. Now, on this example, you can see that the market also broke the high of the line, but this time the market was more aggressive, and it went back inside the box. Now that we know the direction of the market, which is bearish, we then wait for a retracement to the line that it has just returned to. And after that, we expect our engulfing candlestick to appear, and when it appears, we can take the trade, placing our stop loss above the bearish engulfing candle, and our take profit target at the next low, or at least 3 times the size of our stop loss. And here we have it, a wonderful trade. Price went down, straight to the take profit target. Now let's take a look at another example. On this example, you can see how the market broke out of the low of the 4 hours candle line. But as it moved below the line, it went back aggressively into the box again. By now you already know what to do. Yes, of course. You wait for a retracement to the line. And when the market has retraced to the line, we look out for our entry candle, which is our engulfing candle. Please note this, when the market makes a retracement, sometimes you will see a random candle appear. But that should not make you start to trade them. You should only focus on the engulfing candle, as it works best and more easier to identify. It beats other candles hands down, and not only will you make profits with it, but you will also create consistency. Now, on this retracement, we were lucky to get an engulfing candle, and that gets us into the trade, placing our stop loss below the engulfing candle, and our take profit candle at the next high, or at least 3 times the size of your stop loss. And as you can see, our take profit target was hit successfully. Now, I have given you everything you need to become a successful trader. You know the time frames to draw your automatic zones, and the time frame to trade the zones. You know how to predict the market price direction for the day, and how to take advantage of them. If you follow everything that I have taught in this video, you will see great results in your trading life. In the next video, that will appear on your screen right now, I taught on a trading strategy that helped me to make my first $100,000 in trading. This is a very simple but powerful trading strategy. See you there.